Okay, so now we want to talk about who else is already offering what you're doing. So you have competitors and you have influencers, and you want to think about how you're different. So in our business model canvas, there's the area where we write down your unique service offering. So you want to really think about, or you want to take a really good look at what your competitors are doing, and you could do Google searches on them. There's a lot of things that you can do to see what's happening with your competitors and how are they reaching their customers, which are also your customers. So that's a good thing to do. And sometimes an industry or say the makeup artist will have some people who are competitors, but they're like in a whole, like, so they're in LA, for example. So you're a makeup artist in Calgary and your competitors are in LA. They're not really competitors, but it's somebody that you can take a look at and see what they're doing without, stepping on any toes, for example. So you can even reach out to people in other cities and say, hey, I would love to brainstorm with you. This is what I'm doing. And since we're not in competing industries, but we're doing the same thing, let's share best practices. And I've heard of people doing that in various industries, and it works really well. So the thing with competitors is that you want to see what they're doing, how they're doing it. You want to see where they're doing it. So are they on Facebook? So if somebody posts an event, then you want to search for that event and see where they posted it. And you just really want to research what they're doing so that you can figure out how you're different. So are they missing something that you have a unique talent for and that you can offer? That's going to be really important to find out. The other thing that you want to look at in who else is doing what you offer is the influencers. So I already talked about the people who are doing what you're doing in another city or another country that you can talk to and maybe make friends, alliances with, and share best practices. And then with the influencers is who influences your target market. So for example, we're going back to the business coach. So the business coach is specifically a coach for executives in oil and gas. So an influencer there might be if they're engineers, it might be like the Association of Engineers, right? So if you're a business coach just for landscapers, you might, your influencers might be the Landscaping Association. So when you're looking at influencers, you can look online too and see who's got a blog or where do these people hang out. So a makeup artist, influencers might be people who they relate to something to do with makeup, but they're not a makeup artist. So maybe a brand is an influencer. So all your people might be hanging out on the Lancome blog or on the Lancome Facebook page, or so you got to be a little bit creative there to see where you can see what those influencers are doing or connect with them. And again, in the marketing section of Spark Your Business, we're going to talk about how you can reach out to influencers, how you can introduce yourself without saying, hey, I'm starting my business, come sponsor me. That's not the right way to make a relationship. You have to slowly build your credibility. And again, goes back to that trust formula. You got to build your credibility with influencers so that they sponsor your company or help you out in some way. So that's a really important way to grow your business. So now, what are your costs? So when you're figuring out where you are now and where you want to be, you really have to take a look at what all your costs are, because as you grow your business, you are going to have more costs. So it might be great to think, oh yeah, this is awesome. I'm going to get from $500 to $6,000, but you don't realize sometimes what the cost involved in growing a company. So now you need customer service, or you need people, appointment scheduling, or whatever it is that you need to scale. You need to scale everything. So if you want to get to those 6 people a month, that maybe you need more blog writing and all those things. So you need to really figure out what your costs are. And this again is super important, because I've seen entrepreneurs who are already started their business. They're luckily, I caught one right before she printed her business cards and spent all this money on marketing and advertising. And we did the what are your costs exercise, and she realized that she was actually losing money on every sale. So she had to go and reevaluate what she was doing, how she was offering it, and how she was going to make money. So we got to make money, otherwise we're going to get shut down by the people who love us. So the financial analysis is, will this venture be worthwhile financially? Super important question that a lot of really enthusiastic, talented, passionate entrepreneurs don't look at. So what's your sales projection for the first year? Are there any fixed or variable costs? So your fixed cost might be your phone line, your cell phone, your website hosting. Variable cost would be something that relates to your customer, that changes every time you sell something to the customer. So variable cost might be maybe printing as a variable cost if you're not always printing flyers, or say a makeup artist lets people use or she buys like disposable brushes for her clients, so those are variable costs. So gross and net margin. So how much money are you how much money does it cost you to run your business, and how much profit are you making? And then how many expenses do you have? So according to research and industry statistics, an attractive opportunity is at least 10 to 15% margin. And then some things like information products or things that you can do online have 100% margin. So you can charge $50, or I mean, it costs you $50 and you can charge $100, $200. So you just have to figure out the value proposition to your customer. What are your assets and pre-startup expenses, and can you raise capitals to start this venture? So raising capital might be borrowing money from your savings, or if you're having a bigger operation, you might have to borrow from the bank or borrow from friends, family, or eventually raise money to have a really big operation. So we also want to talk about risks. What are your financial risks? There's a break-even analysis. How many things do you have to sell to break even? It's really important to figure out. When somebody's having an event, for example, you always want to figure out, what is my break-even number? So I need 25 people at my event in order to pay for all the costs. And you got to think about all the costs when you're looking at a break-even number. For a business, you want to figure this out on a monthly basis. What is my payback? So if you have if you've taken out a loan from the bank and you think it's going to last you about a year, how are you going to pay it back, and how are you going to calculate that? So I had talked to a customer this week, and he was telling us about they got funding for $1 million, and then they weren't able. They did everything they had to do, but they weren't able to grow the business the way that they needed to. They weren't able to pay it back, and so the business really didn't go anywhere, even though they had $1 million of funding. So it doesn't matter how much money you get. It's how you work your numbers and how you manage your business. So even if somebody poured their whole bank account right on you, it doesn't mean that you're going to be successful if you're not looking at what your numbers are doing. So return on investment. So what money are you putting in, and what profit are you getting out of it? Risk versus reward. So what's your personal feeling on the risk? So if you're putting your mortgage up to run your business, maybe that's not what you want to do. Maybe that's not worth it for you. So you need to evaluate where you are with that. Opportunity cost, we talked about that before, just in the little blog scenario. Can you get a better return somewhere else, or can you, so can you get a better way of doing things? But again, in your overall business, the opportunity cost is this the right business for you, or is it better if you work on another business or another business model, because it's going to give you a better return? And then, like we talked about, the personal financial risk. What do you have to give up financially to start this business? And I have a little worksheet. Before we go into what is your customer worth to you, I have a financial analysis worksheet that I just want to quickly walk through to show you some of the things that you need to consider. So doing a screen share again. And on this one, we're talking about the income statement. So in an income statement, you want to look at your sales and then your cost of goods sold, your controllable expenses, fixed expenses. So the controllable expenses is maybe a variable expense. And then you want to do like a few calculations to figure out where you are. So I just want to show this because I want to show what kind of things you can calculate. So cost of goods sold is what does it cost you to sell your service? So beginning inventory. So this is for somebody who's selling product, but if you're selling services, you want to say things like, okay, how long did it take me to do an assessment on this company, or how long did it take me to run these parties? How much inventory do I have to, so I'm talking about the makeup artist, how long did it take me to run these parties? So that's $50, $100 of my time. And I bought this many products to bring to the party or to showcase. So my makeup's getting depleted. So that those are all the costs that you want to look at there. Controllable expenses are your salary. So if you're paying yourself $50 an hour, maybe you can pay yourself 75. So, you know, that's where it changes. Employees' wages, if you're hiring someone to write your blogs, if you're hiring somebody to work on your website or do different things for you. So that's going to be some expenses there. Supplies and postage or office expenses, advertising. Bad debt means how many people, so if I've served 20 people, how many people are not paying me? So you put like a minus number here, and out of, you know, the bigger you get, the hundreds and hundreds of people you serve, there's going to be some problems with people not paying. That's just how business goes. So you have to take those calculations into consideration. Travel, how much cost do I incur in getting to the place, or maybe I'm going to do like a trade show, things like that. So there's all these different kinds of costs. Legal and accounting, and I would put insurance in here too, or we have a fixed expense at the bottom. But legal and accounting is going to be, you don't know when you're going to have legal or accounting expenses, and they always change. So if you do your taxes every year and your business taxes with an accountant, it's going to be a little bit different. So those are your controllable expenses, or things that are a little bit different sometimes. So they can go up or they can go down. Fixed expenses is your rent. So if you're renting a facility, or if maybe you've got like a suite number at the UPS store. So those kind of things. Your utilities, what it costs you to run your business, telephone, taxes, depreciation. So that's if you buy a computer, and you can talk to your accountant about that, what depreciates, or if you have equipment that you're using. Interest, that's an expense. So if you're borrowing money and you're paying interest, you can write that off. And insurance. So insurance is a really big, I just really want to highlight that, because a lot of newer business owners don't get insurance, and there's a lot of liability when you're doing business with people. So you want to make sure that you get the right insurance for what you're doing. So again, I'm just going to go back to the makeup artist because that's really easy. Do you have insurance when you do makeup parties at other people's houses? Are you insured for that? The business coach, are they insured to go into somebody's workplace, or if they're coming to you, like what if they slip and fall? There's like a million things you got to think about. So you just want to have some kind of basic insurance, or at least investigate that and know what your liabilities are. For the interior designer, what if you just totally break something in there, break the kitchen faucet, I don't know, and are you covered under that? So as a small business owner, often insurance gets left behind because it feels like a waste of time, and it's a waste of time until you need it. So there's your calculations, and then so you can calculate your total operating expenses, which is the expenses of your controllable expenses, your fixed expenses, and then your profit or loss. And you can even do a calculation of your estimated tax, because you want to put money away every month from the profit you make. So again, an entrepreneur mistake is forgetting that maybe 30% of your money needs to go into a different bank account to pay for taxes, when I first ran my studio, my dance studio, I made a ton of money, and then at the end of the year, I totally forgot about taxes. And because I made a ton of money, it was a lot of money that I owed. So that's a huge thing. And we talk to business owners all the time. Like, they could be making $1 million a year, and then they're like, oh, oops, I have to pay my taxes. So now I need to go look for more business and like working into the future to pay last year's taxes. So that's really important. So we're going to go back to our screen share. Actually, I'm just going to go straight from this document to the lifetime value, so I don't have to change screen share. So with the lifetime value of a customer, what's really important here is, what is your customer worth to you? So we're just going to go through a little exercise here, and then that actually gives you some ideas of how much money you can spend looking for a customer. Because if your customer is worth $100, maybe you spend $10 to find that customer. But if your customer is worth like $2,000, then you know that it's worth spending a little bit more money, and you need to calculate, again, you need to calculate that amount. So how much is your average service sale? So how much do you sell on average? So this isn't your highest package, this is your average sale. So let's say it's $1,000, just to make it easy. Your average sale is $1,000. And then how long will the customer use the service? So this is, for example, a website package in this example here. So a website designer might charge $1,000 for a website package, or $1,000 a year, for example. So the customer is going to use it for 5 years. Do you provide additional services? So what are all the other little things that you sell that could go with a website package? So maybe you sell marketing services, maybe you sell social media, so all those different little services. And so you want to list them here in this line. So this example, it's $99. And how often does the customer make a purchase of that $99 product? So this 3 times a year. This should not be a number. Okay, so purchases 3 times a year. And what's the average cost of any services that are renewed or have to be repurchased every year? So in this case, the website package was $1,000 the first year, and then $500 every year for 5 years, right? So this is the life of your product. And on average, how many referrals does that customer make as a result of the sale? So so say I'm the website designer, I haven't really worked on my referrals, so they do about 1. And you're going to see how important the referrals are here. We're going to look at that in a second. So how much profit do you make off each sale? So say the website designer makes 75% profit on that 1,000. They do a page on Wix or Weebly, and then they charge $1,000. So let's say that's the example. Okay, so then here's some calculations on services. So if we think about services, the average sale is $1,000. The amount of time the service is used is 5 years. So other sales, so this is actually just the same formula as above. And we're just entering the numbers in here. So this is how it gets calculated. So how many years does the customer use the service? 5 years. And additional services is $14.89. So that would be that $99 additional service times 3, because they purchase it 3 times a year. And so that would be 3, and then times 5 because they had it for 5 years. And the average cost of services that have to be renewed every year. So now this is the $500 is renewed every year for 5 years. So that's $2,500. So the total sum is $4,985 in this example. And that's how much my customer is worth. So that one customer, but if they refer one person to me, now that doubles, because every customer is worth let's say almost $5,000. So that number doubles. So now this one customer is worth $10,000, and I make 75% as the web designer. And so that means that the customer is worth a profit of $7,477. So you can see how important this formula is to figure out. So again, if we're talking about the business coach, let's see. So the business coach, what's the average sale? So we said in the other example, it was $1,000 for the high-end package. So let's say the middle package is $500. And then how long does the customer use the service? So maybe a customer comes back for 5 years before they just never show up again. What additional services? We can keep this. Let's say it's $20. They get a book, or they get some other little things there. So how often do they make the purchase of these additional services? So let's say they take like a course every couple of months, and it costs them $20, just to make it really easy. So every couple of months, or maybe they're going to do it 6 times in a year. Every year they're going to spend $500. So every year they renew their package of coaching services for $500, and they just renew it once. So that's 5 years, once every 5 years. How many referrals? So say this coach always gets like 2 or 3 referrals from the same person. So she's working a little bit harder on her referrals, and her profit is 75% because she's doing, it's her time, and or let's say it's 50% just to have fun with it. So these are the results. So her customer is worth $3,600. If she gets 3 referrals, then her customer is worth $14,000, and then if at 50% profit, she makes $7,000. So you can see how when you look at your numbers, you can change certain things. So say she had, she could figure out how to reduce her time somehow, maybe do group coaching. So it's 75% profit. So in that case, the customer's worth $14,400. It's $10,000 here. The other number didn't change. Say she got like a whole bunch of referrals, or less. Let's say she got less referrals, 1 referral per customer. So the number goes down to 5,000. So that's a huge change in numbers. So just by getting 3 more referrals, it went from 10,000 to 5,000. So I just want you to notice here how important referrals are. And you know that the value, if you just spend 10% on your customer, for example here, so marketing for your customer, you want to spend about $500 per each customer, so to get each customer. And then again with the referrals, if you spend 1 referral, you make, this coach would make $2,700, and if she did 2 referrals, $5,400. So that is where the numbers come in, and it's super important to know them. And again, we're going to talk about referrals in a different module and how you can maximize that. So back to our screen share, we're just about done. So what's your customer worth? We figured that out, and that is really the end of this presentation. And just want to remind everybody that your next module is Spark Your Why. So what transformations you provide, and getting clear on who you serve, what's your hero's journey, and what you're passionate about, what you do. And the reason we want to look into that is because you're going to find the language that your customer wants to hear when they're talking about, or when they're listening to what you have to say, and how it relates to them. Then we have Spark Your Brand. So it's about communicating your brand and understanding design and things like that. So now that you know where you are and what you're offering, then you can actually start working on your branding. Using your website as a tool to gain trust. We've talked about that before, and all the things that we're going to talk about in that episode. And then social media, creating a plan. Now that you've got all the tools, you've got your brand and you've got your marketing message, you know where you are and where you're going to go. you can start working on all these different things. And the last one is, can you do workshops with your business? So again, looking at that referral number and the lifetime value of your customer, how can you reduce your cost by doing group work? That's it for today. Thanks, everybody. Hope you had a great lunch and learn.